Hello. Today we will talk about a stock which flies under the radar. Betsson AB is a Swedish company operating in online casinos, sports betting, and other gambling activities. They plan to grow faster than the overall market. As we can see, online casinos is their biggest segment, representing around 70% of their revenues, followed by sportsbook, which nearly make up the remaining share. Betson has a global presence, operating in Europe, Canada, and Latin America. Even though they are not everywhere, they are quite geographically diversified, with a well balanced distribution across the different regions. They released their Q2 2025. As we can see, the growth has remained consistent over time. Moreover, it's worth noting that the share of revenues coming from regulated markets has increased over time, reaching 66% this quarter. On one hand, this is good because regulated markets are generally more stable. Moreover, operating in them often requires a license, which creates a barrier to entry for new competitors. On the other hand, these licenses come with a cost, stricter conditions, and more controlled taxes, which may impact the margins. However, as we can see in their latest report, the margins have remained relatively consistent over time. For example, gross margin decreased slightly from 66 to 64%. But during that same period, the share of revenues coming from regulated markets has increased by 21%. As we can see, the other margins such as EBITDA and net profit margins have also remained stable. Everything we have discussed so far can be confirmed by our app StockQuest AI, where we can see in summary that all the key metrics are green. Of course, the risk and uncertainties of their Betson are closely tied to the nature of their business. Gambling is not always perceived positively, and to be honest, I am not a big fan of this industry myself. But, as Peter Lynch said, you might consider investing in businesses and sectors which are out of favor. That said, it's hard to deny that gambling is probably one of the oldest human vices. Even back in the days of the gladiators, people were betting, and early forms of casino have been around for hundreds of years. On top of that, gambling, casinos, and associated activities are a major source of income for governments through taxes and licensing. Then, while controversial, it's really unlikely that governments would want this industry to disappear entirely. Moreover, in this sector, it's really hard to create a real moat, as switching costs for a client are really low. They can easily move to another game or another platform. Now, let's discuss about valuation. As we can see, the price is lower than both DCF and DCF-NG values. As a reminder, DCF is calculated using the average growth rate, the operating cash flow and capex margins over the past 5 years, and assuming these figures remain stable for the next 5 years. DCF-NG excludes any growth assumptions. Here we can see that even without growth, the stock price seems undervalued. But the current growth is 12%, and the current operating cash flow margin is around 21%. then we can say that the DCF value might be overestimated. However, even if we are unsure about the real intrinsic value of the stock, we may expect this value to be higher than the current stock price. And AI has come to the same conclusions. Then, is it time to bet, son? Only time will tell. Everything you will see or hear in my videos are my personal opinion. It's not a financial advice. You should do your own due diligences and research. If you found this content useful, feel free to like the video and subscribe to my channel. Thanks for watching and remember, don't waste your time, invest it.